Hey guys, welcome back. I hope you had a really great day trading yesterday. So yesterday was Monday, January 27th, and we had some really beautiful drops over the weekend, and we had some really fun price action after the drop. It is the start of a really busy week as far as economic data and earnings, and tomorrow, Wednesday, January 29th, we have the FOMC rate decision, and we also have Tesla, Meta, and Microsoft earnings. So a lot of big stuff on the horizon, and yesterday we did open SPY with a big gap down to the 50-day moving average. So big opening move. We caught that 50-day moving average. You could see this downward facing 1 hour 200 moving average. I have been talking about this level. And between the 50-day moving average, which was facing up, and that downward facing 1 hour 200 moving average, we did catch some support here. So we did see sideways price action after that initial drop underneath the 50-day moving average, bounced on the 1 hour 200 moving average, got back above the 50-day moving average, and that second candle from about 10 p.m. to where we closed was flat. So how did I play this yesterday? So I posted charts on TradingView and I got them up about 10:15, and about 10:15 in SPY I did put on an iron butterfly, which did take advantage of this sideways action and all the premium that was right here. I was counting on some sideways action along the 50-day moving average, and thankfully that is what happened. So iron butterflies did pay yesterday. That has been my opening move lately, usually around the second or third 30-minute candle. So I don't start right away. I let the market choose its direction and then put on an iron butterfly. So SPY did close down 1.41%, and that was a big down day. SPX, same move here. We opened with a big gap down. Let's put this down gap right here, and we gapped down underneath this up gap right here, and then we gapped underneath that. That is a island top reversal pattern. That is a bearish setup right there, and we did gap down to the 50-day moving average, the 1 hour 200 moving average facing down, and the 30-minute 200 moving average was also there. So we did find support along these moving averages. You could see almost a perfect bounce here on the 30-minute 200 moving average. We got back above the 50-day moving average and stayed sideways pretty much from that second candle to where we closed was flat. And big down day here again, down 1.46%. Iron butterflies again for the win here. And so let's go back, and SPY down 1.41%. SPX down 1.46%. VIX closed up 2.24%. So we're up at 18 here. And we did hit 22 for the high in VIX yesterday, and we did not close within the implied move. It does look like we did here, but this was a modified setup yesterday. This chart was on TradingView, and it was a modified setup that I used VIX after we opened yesterday. So if you go out on my TradingView, you'll see this setup. So we did stay within the implied move from where we opened, but not from the usual close of the previous day. Hopefully I'm making sense. So 50-day moving average so far, support heading into earnings and big economic data, also that 1 hour and 30-minute 200 moving average. We do still have a red signal line, and we have red signal lines on other time frames here. So this is a 30-minute time frame. 1 hour has a red signal line right here. Let's check the 4 hour really fast. 4 hour time frame. 4 hour time frame still has a green signal line, so we are pretty high above that still. But 30-minute and 1 hour time frames are bearish right now, and you could see that we're trying to hold the 30-minute and 1 hour 200 moving averages. All right, QQQ, we did open here with a big gap down. QQQ definitely having the biggest down day yesterday with some issues in the tech sector. We did open underneath the 1 hour 200 moving average. Remember that 1 hour was pointing down. The 30-minute 200 moving average went flat, and the 50-day moving average has been flat as well. So momentum definitely looking weak here, and we also had a red signal line. This red signal line and this rejection here actually showed up on the previous Friday, which was your signal to be short. So we saw that rejection on Friday, follow through with the gap down on Monday, and we took it underneath the 50-day moving average. That is a big move. We got back underneath this downtrend right here. So this pop up above this downtrend could have been due to it being inauguration week and the start of big earnings, but we did come back down underneath that. And you can see that 1 hour 200 moving average is almost lined up right with that. So we gapped underneath the 50-day moving average, bounced here in this up gap right here, took it back up to the 50-day, filled a bit of this gap, and then we did get rejected at the 50-day moving average. So 50-day moving average, 30-minute 200 moving average right there teamed up to push us back, and we got pushed out of this bull gap. That is very bearish. So red signal line, resistance at the 50-day moving average in QQQ, and of course tons of big earnings tomorrow. Not today, tomorrow, but Wednesday, tomorrow. Tesla, Meta, Microsoft. QQQ has a lot of stuff coming up. So 50-day moving average is going to be a critical level to watch, and it could hold as a resistance right now. So QQQ closed down yesterday, 2.91%. VXN popped 18.61% at close. That is huge. We are back above 20. 21.62, and we did not close within the implied move, and this is actually the modified expected move. So if you did see the charts I posted out on TradingView, if you're not subscribed over there, it is free and you'll get them before trading. But if you did see this chart, this was right after markets opened. I posted this chart, and we did stay within that implied move, but not from the previous day's close, which I purposely didn't do because of that big overnight move. So we did stay here within the expected move that was modified for day trading. So I will clean up these gaps here before heading into tomorrow's trading ranges. And IWM here, we did have a pretty normal looking day over here. This expected move setup here was just like normal. I used regular from close, and we did stay within the implied move. So IWM and DIA traded differently than SPY and QQQ. We did actually stay completely within the implied move, or rather, let's not say we stayed because here we dropped out, but we did bounce on the 4 hour, 1 hour, 30-minute 200 moving average combo to close back up into the expected move. So let's actually start from the beginning here. We did open with this volatile candle, and we opened down, came back up, saw resistance at the 50-day moving average. And last week, 50-day moving average was somewhere around here. And then we did see that turn down, and we did see it as resistance here, here, and then yesterday here. So we popped up after finding a nice bounce on this up gap, and then we came up to the 50-day moving average, got smacked there all the way down, then we filled this gap completely, and when we got to the bottom of the trading range, we got to some really interesting levels. So 225, which is a really big level. I'll zoom out in just a second. We have a lot of history there. I know I've been mentioning that level last week, but then we also had this downward facing 1 hour 200 moving average. Without a doubt, I mentioned that last week, that is going to pull us down, and it did. We also have the 4 hour 200 moving average right there, and basically right where they crossed is where we bounced back up to close within the implied move above 226. So we closed 226.5, And we also have the 30-minute underneath that and another support gap. So lots of interesting stuff at the bottom of the trading range yesterday. And then let's zoom out and look at 225, because if we go back, you could see here it was support, but before that, resistance, 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 and then here kind of a support. We stayed above it, and then zooming back, resistance here, and 225 right here. We had it as a very strong resistance, and we did see that pop up to fill this gap, and then immediately we got hit really hard back down. So 225, we have seen that level a lot, and now we do have that as, I'm not going to call it a support, but that is where we did bounce, and we did see that 4 hour and 1 hour right there as well. So all three levels put together, plus the bottom of this up gap, it was a huge level to see a bounce back up, and it was absolutely beautiful. So IWM down 0.96%, RVX up 9.11%, and we did stay within the implied move here at IWM. DIA had the biggest up day, it had the only up day, and we did start with a very volatile candle. So first candle did take us underneath the 35 EMA right here, but we did pop it right back up. We got back above the 35 EMA, and we took it up to close up 0.68%, and we did close within the expected move here. And we also did see a cross up of the 30-minute 200 moving average above this 1 hour 200 moving average. Now the 1 hour momentum is pretty flat here, and this is a bullish move right here, but we are underneath the 50-day moving average with these moving averages, which is bearish. So that could pull us down a little bit. And we don't have any island gaps down here, but we do have 3 gaps that will likely at least 2 out of the 3 will fill. So we do have some levels to retest underneath here. And all right, that is a recap of yesterday, and let's check out today's levels. Alright guys, don't forget to like, subscribe, and turn on notifications, and let's get right into it today. So starting in SPY, the implied move for today is between 594 and 605, and that is from options, and the 30-day average volatility and the next day's expected move is between 592 and 607. And to the upside, we do have this down gap right here. That was from yesterday. And we do actually have an island top reversal in our trading range, which is this up gap and this down gap. So where they overlap is up here near the top of the implied move. And before we even head into that up gap here, we have this 35 EMA. And the 35 EMA is still trading above this 30-minute 200 moving average. That does make us still bullish but neutral. But definitely look to this level as a possible resistance. We are in a bear gap, and then if we get above that, the top of the implied move is 605 and 607 on Wednesday's contract. So if we do get to the top of the implied move today, then I would probably be looking in between the two strikes as a place to sell. I like to sell spreads, so I would do bear call spreads 606, 607, and then the top of that bear gap is at 608. And then let's just scoot this up. That is where we have all-time highs. That is at 610.78. And then underneath us, we have the 50-day moving average. And at the very bottom of the implied move, which is at 594, we have the 1 hour 200 moving average and the 30-minute 200 moving average. That 1 hour is still facing down. Bottom of the implied move is 592 on Wednesday's contract. And then the bottom of this up gap is 591. And then SPX. The implied move today is between 59.60 and 60.65, and that is from options. 30-day average volatility and Wednesday's implied move is between 59.40 and 60.85. And to the upside, we do have this down gap that takes up almost the entire implied move for the next 2 days. And then within that, we have the 35 EMA. And then this up gap, so this is a bearish island top. And then underneath us, we're sitting right above the 50-day moving average. We did drop underneath it at open today, came back up and saw that as support. Under that, 1 hour 200 moving average, 30-minute 200 moving average, and then the bottom of the implied move is at 59.60 and 59.40 on Wednesday's contract. Underneath all of that, and this is going to be for SPY as well, we do have another island gap. Now, overlapping gaps will always fill. We don't know when, but they will fill. So under here, where they do overlap, 58.89. And then QQQ, the implied move here today is between 507 and 521, and that is from options. That also lines up with the 30-day average volatility. And then the next day for Wednesday, 504 to 524. To the upside, we do have quite a bit to look for. We have the 50-day moving average. We did see that as resistance yesterday. And then right above that, the 30-minute 200 moving average. It looks like that 35 EMA is coming down. And if it crosses underneath the 30-minute 200 moving average, then QQQ will be bearish. And you could see what happens when we do see a cross down right here. And here we do end up seeing that 35 EMA trade underneath the 30-minute 200 moving average, and it acts as a resistance. And that is 30-minute 200 moving average right here, downward facing 1 hour 200 moving average. Above that, that is at the very top of the implied move, which is at 521. And then the implied move on Wednesday's contract is 524. Remember, Wednesday is the day we have the FOMC rate decision and Tesla, Meta, and Microsoft earnings. So big expected move on Wednesday. And then that takes us into this bear gap right here. So this bear gap takes up the entire part above the 30-minute 200 moving average. You can also see a little bit of this up gap right here. We filled most of it from the bottom, but then we got rejected at that 50-day moving average, leaving this bull gap open. So the top of that gap is at 518.78. So let's call it 519. That's also going to be another resistance level. So 3 resistance levels right here. That could be a level that pushes us down quite strongly, and then that 35 EMA coming down as well. So the upper half of the trading range in QQQ is no joke. And then underneath us, we did see support today around 510, and let's not call that support quite yet, but that was the low of the day. And then underneath that, we have this up gap, and the bottom of that gap is at 505. That has the bottom of the implied move at 507 on the day in there, and then 504 is the bottom of the implied move on Wednesday's contract. You could see that 4 hour 200 moving average coming in as well. So if you are going into this looking for short targets, 4 hour 200 moving average for sure. All right, and then IWM, the implied move here is between 224 and 230. That is from options. 30-day average volatility, it is $1 to the downside, 223, and then it's 230 to the upside. And then on Wednesday's contract, 222 to 231. And you could see right away the momentum here is down. So 50-day moving average, we did see that as a resistance for the past few trading sessions. And then that downward facing 1 hour 200 moving average gives us kind of a channel. So then to the upside, we do have this 35 EMA. And if we do get above that, then that 50-day moving average, and then 230 is the top of the implied move, and on Wednesday's contract 231. I'm definitely looking at 230, 231 bear call spreads if we do end up trading up. And then to the downside, we have the 4-hour 200 moving average, the downward facing 1 hour, and the 30-minute 200 moving average, all in the bottom. That definitely could hold us today within the trading range if we do drop. So 224 bottom of the implied move, 222 on Wednesday's contract, and we do have an island gap underneath that we still need to fill. So if you're looking for targets, the bottom of that gap is 220. And then DIA, I don't know if I'm really giving a good trading range here. 440 to 453 as the implied move. I feel like I didn't quite set this chart up right, but that's okay. Let's just look at the levels within it. We don't have a whole lot. We have the 35 EMA. That's actually the only level in the implied move for the entire week. And then above that, we have previous all-time highs. So all-time highs at 451.55, and then the top of the implied move is 453. Underneath that, 440 is the bottom of the implied move. And then we also have the 50-day moving average and a whole bunch of gaps to fill here. So if we do drop underneath this 35 EMA and start trading down, you could see that here we did have a bearish divergence. If this plays out and we start to go lower, first look to 440 and then 50-day moving average, because the 30-minute and the 1 hour are underneath the 50-day moving average. That is bearish, and most likely we will get pulled down. It looks like bulls are possibly targeting all-time highs here, and it's possible that we tap that first, but really I'm looking down at this point. There's enough bearish signals to look at downside targets. So there you have it, guys. We have lots to look for. Have fun, trade safe, make sure you take profits when you're up, and I will see you guys tomorrow night.